Will the Bears be able to eke out a gain today as we see the fear and greed index is still at 35? Or are the Bulls going to come back and push the fear and greed index outside of fear territory today? Now, when we look at the economic calendar for today, we have very little economic news. 9:15, FOMC, member Waller will be speaking. 10 a.m., we have CB leading index. Now we see Goldman Sachs shifts again, now seeing a smaller chance of a U.S. recession. And you know what this is, guys? This is nothing more than trying to get the retail crowd to go ahead and buy, hold the bag once the recession starts to take hold. Because then when we look right here, Wall Street is 6 times the value of Main Street, says Bank of America. And I don't care if it's stocks, houses, cars, groceries, clothes, any of that stuff. Do you want to be buying when something is overvalued? Or do you want to go out there and buy it when it's on a sale? And that's exactly what the big firms are trying to get us to do, right? Go all in. The market will never go down. We look right here. U.S. credit card debt soars to $1.14 trillion. Americans are holding more household debt than ever before as one of the biggest banks in the country warns of a weakening consumer. So they keep telling us no recession, everything is fine. But then if you look in the details, right? Within the details, we are seeing weakening out there. Then today after the bell, then let's not forget, we still have earnings coming out today after the bell. I got my eyes all set on Palo Alto. And we look at Palo Alto, it is expected to move plus or minus 9%. Now, when we look at a chart of Palo Alto, right now in pre-market is up $2.04. When we come over and we look over here to the left, we have a large gaping gap way above us. Now, in order to come over and fill that gap, we need to get somewhere in the ballpark of 366. Right now, we're trading at 336, and we're expected to move a plus or minus 9%. However, to the downside, the real threat is any of these high volume areas, such as 300.45, and then down here on the composite profile, about 284 to the downside. However, before the bell today, we had Zim come out with earnings, and we can see Zim was expected to move plus or minus 13%. And right now in pre-market, Zim is actually up 15.5%. Now we had that double top pattern. It never came down and hit its actual target location. And now it's right back up into that area with a large gap. Will this gap hold in the market? And are we about to see other gaps unfold today? We come over this morning, we take a look at the volatility index, and what do we see? In pre-market, the volatility index is up 5.81%. We can see when it opened up there in London, big gap on the way up. Is it just going to go ahead and meander all the way back down, potentially fill in the gap? We take a look at the dollar index. Dollar index is back on the decline once again, down 26 cents on the session. And if you look, we had a potential for a double bottom, and now we have taken out that double bottom pattern. The MACD indicator still looks extremely weak. Then when we come over and look at gold, last night, gold was able to make another new all-time high and then coming down lower. But let's not take our eyes off the prize. We have the ABC completion up here at 25.86. The ABC pattern has been confirmed once we were able to trade above 25.37.3. Then as we come over and look at some of the overseas markets, the Nikkei last night was down 1.77%. The HSI index was up 0.8%. Then we come over and look at the DAX. The DAX is up 0.24%. Then we come over and look at small caps, down 13 cents on the session. And the small caps have really been lagging on this move on the way back up in terms of the corrected move from a few weeks back. We come over and look at the Dow. The Dow has been on the move as well. The Dow is up a whopping 12 cents. But one of the problems I have is we do have these large gaps just below us. Now, it doesn't mean we're going to come back and fill the gaps today, but we do want to be mindful of those levels. Then we come over and look at the Qs and pre-market up 24 cents on the session. And again, when we do a basic candle count, here was the last down candle. We have 1, 2, 3, 4, 5, 6, 7. We have 7 consecutive up candles in a row. Now, that does not mean we can't have 8, 9, 10, 11. It just means we're starting to get a little bit overextended in one direction. Then a couple day pullback would not be unwarranted up here at these levels. The MACD indicator on the daily chart is crossed to the upside. Then as we look at the 4-hour chart, the MACD indicator is showing no signs of weakness at this point. Now, if we do start to pull back, one of the things I do like is look at where this high volume area is on the composite profile at 463.31. That is also right near where we had this gap up that would come very close to actually fill in the gap. On the 1-hour chart, we can see on Friday, we started to have the MACD indicators cross to the downside. Then as we come over and look at the 30-minute chart, you can see that large gaping gap. MACD indicator has already been crossed to the downside. Now, this is a warning sign for the bears out there. If the MACD indicator gets down towards the zero line and we're still up here near these recent highs in the market, watch out. We're probably going to go ahead and take another leg up higher. That would be nothing more than a recharge point for the market to go higher. Now, as we come over and we actually look at the volume profile levels, value area high from Friday comes in at 476.02. The point of control will come in at 475.05. Value area low is going to come in at 473.41. Now, as we look at this, if we can break above value area high and then we start coming back down, I then want to target the point of control, value area low, then the lows from Friday, and then maybe all the way down here towards gap support at 468.34. Then maybe all the way down here towards potentially filling the gap. However, if we breach above value area high, then I got to be open to the idea that we're probably going to continue to have further upside testing. And one of the areas would be right over here on the composite profile at about 482.71. So again, let's use the volume profile levels to give us an if then syntax. Should we be long or should we be short this market? I want to make everybody aware Apex 7 is 71% sale off all their valuation accounts, passed in as little as 1 day, 50% off reset fees. And if you're a trader that likes to trade the larger accounts like the 150K account, the 250K account, and the 300K accounts, the activation fee for those accounts are only $40. Now, if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Then as we come over and look at the futures markets, notice we're spending a little bit of time right here in this minus development area. Now, we do have some key areas I do want to focus on, which we'll talk about when we look at the daily profiles, but one of them is right here near this minus development area. We also have an untested value area high that we closed above from last week, which comes in at 19,424.00. At some point this week, it's highly probable we are going to come back and test that level. So make sure you have that level marked off on your chart. Then as we dive down and look at the daily chart, notice what we did last night. Last night, we came all the way down, basically testing out value area low at 19,525.50. The absolute low last night was 19,525.25. So we went below it by 1 tick. Now we're on the move back up. So what does that mean? That means from a daily perspective, we have a volume profile on the way up. First target is right here near the point of control. If you use this high volume node right over here, I would not fault you either. Then the next target is going to be up here towards about 19,642.50. So if you really want to get short, one, just like we did last night when we got above value area high, once we started coming back down below it, we could have played the rotation on the way down. Now we're on the rotation up. So we need to get back above value area high and then see, can we come back down from that level? Or we need to start breaking back down below value area low if we want to be on the sell side of the markets. Now, the overnight volume profile levels will come into play here in just a bit as well. But when we come over and we look at the SPY, notice what we have. We have several up days in a row. I think it's 7, just like the NASDAQ. 1, 2, 3, 4, 5, 6, 7 up days in a row. But we do have this large gaping gap, and we do have a high volume node on the composite profile right near that area as well. Now, we do see the MACD indicator lines are across to the upside. Then on the 4-hour chart, you can see we have a good separation of the MACD lines, showing no signs of weakness at this moment. However, once weakness does start to show up, the gap high volume node will be high probability targets. On the 1-hour chart, we did have the MACD indicator just crossing and starting to roll over. And again, we have 2 gaps that are right in our line of sight. Then on the 30-minute chart, what do we have? Well, I want you guys to pay attention to not only value area high, value area low, but also mark off this minus development area right here at 553.54. If we come down into that level today, watch out. Do we see signs of reversals? If we do, that could be an area where the market reverses and we pop right back up. Looking at value area high though, that comes in at 554.89. The point of control will come in at 554.29. Value area low will come in at 553.00. So if you want to be a bear in this market, wait and see. Can we get above value area high? And then do we start to come back down? If the answer is yes, then I'd want to be on the sell side of the market, targeting the point of control, the minus development area, value area low, down here towards the lows of Friday, about 521.27, then down here towards gap support, and then all the way down here, potentially filling the gap. Now, I'm not really in the camp where I think we're going to come all the way down, fill in the gap today, but it is a target that I do want to have on my chart, and maybe it takes a couple days before we get down towards that price point. Then as we come over and look at the futures markets, we talked about these 2 untested point of controls in this weekend's video, 5610.75, and the second one, 5648.50. Now, are we going to simply rally up towards that level and then reject back down? Or are we just going to keep going up? Or are we going to be attracted right over here towards this high volume node, which comes in at a price point of 55.31? Now, as we look at the daily profile, I want you guys to also focus right here on this minus development area that can also be very evident looking at the daily profile. And that area is going to be down here towards 54.92 up here towards about 55.04. Now, I'm not saying we're going to make it there today, but it is something we do want to have on our radar. Now, when we come over and we look at the daily profiles, notice last night we sold off, but unlike the NASDAQ, we were unable to get below value area low. We did go above value area high. So we did get the rotation on the way down, target one being the point of control, but we never, came all the way down towards the bottom. So until we get back above 55.83 and a quarter, I still want to be on the sell side of the market unless the overnight volume profile levels are contradicting that statement. So now as we come over and look at the overnight volume profile levels, starting off with the NASDAQ, notice we've almost made it all the way back up here towards value area high. Keep in mind that price point is 19,642.50. Now, when we look at the overnight value area high, that comes in at 19,635.50. Point of control will be 19,582.00. Value area low will be 19,549.50. Now, if we can get above value area high from the overnight, then we start coming back down. I want to target all the overnight volume profile levels along with Friday's value area low. Anything below that price point, I want to try to retarget near the lows from Friday. Then let's not forget about this little area right here. This is a structure breakout point where we had the swing point here. The market broke out. We have failed to come back and test that price point, and that's somewhere in the ballpark of about 19,225. As we jump over and take a look at the S&P 500, we can see that value area high for the overnight comes in at 5589.50. The point of control will come in at 5585.50. Value area low will come in at 5576.00. Now, for all intents and purposes, we're just kind of stuck right in the middle of value. But if we do start rallying up at the open, we get above value area high, and then we start coming down, I do want to play all the overnight levels as potential targets to the downside, along with a retest of value area low. But one thing to note, if we do start coming down, we get below value area low, and we start coming back up, we would then need to be back on the buy side of the market and just see, is the market going to continue to rally up, potentially taking out some of these untested point of controls out here on the higher time frame charts. Now, if you want to learn how to avoid your stop loss from being hunted, make sure to watch this video right here.